Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for WealthPress. Today's Thursday, it's March 17th, and the market's going to open up in about an hour and 29 minutes to be exact. Now, as you can see here, the markets are down a little bit beyond random. The Dow's down 100 points, the Nasdaq is down 64 points, and the S&P is meeting us halfway in between. Now, I would say this is a non-random market. It's beyond random because the Dow's down more than 75, 85 points. But in light of the volatility that we're seeing, this is probably very, very random. I mean, the daily swings have been 400 or 500 points. The ATR on the Dow, which I'll check later, ATR is the actual true range or the average true range. It's probably, if I had to guess, 400 points, 500 points a day, right? That's what we've been seeing the last 10 days or so. So the fact that we're down 100 points, especially after a major federal event, is not really all that significant. You've got to kind of look at the bigger picture. Now, yesterday, as I mentioned, we had the FOMC announcement. The Fed raised rates a quarter of a point, and now they don't think inflation is going to pass this quarter, but the first part of the year, but the second part of the year. But today we've got industrial production, manufacturing activity, jobless claims. Housing starts I wouldn't put too much focus on. That's not really the big driver right now because housing has been fairly steady for a long time. But industrial production is very big indicator right now in light of the inflationary pressure we're seeing and the supply chain bottlenecks we've been seeing. Now, put the call ratio, market internals, believe it or not, market internals are still drastically overbought, which means, or the put the call ratio is overbought, which means the market is oversold. This is an inverse indicator. This is an indicator when we're above the red line here, that means markets are oversold. When we're right here in this area, that means markets are overbought. We haven't been to this area since November and December of last year. So as you can see here, the markets have been very oversold because we're over the one area. Even right now, we're at 101. So that means we have a lot more upside to go. The question is, when will that upside come and at the expense of what level of volatility? And that's being responsible. Now, another major factor is volatility. This is directly the short-term 1-month volatility, looking at the VIX, and it is going down. I'm hoping we could see the level go down to the $20 level. If we could see it go down to the $20 level, that would relieve a lot of the pressure and stress we've been seeing on the economy. And that would also tell us that the market is assimilating this war. Now, will it happen? Yes. How long it'll take, that's the question mark here. How long will it take for VIX to come down to believe that the war is not a meaningful global event? That's a big question mark. Now, let's take a look at some interesting technicals here. If you're looking at I'm looking at market sectors, and this is interesting. On a 5-day basis, consumer discretionary, which is the most speculative and the most bullish sector, has been rising. Look at yesterday. It says today, but this is yesterday. Consumer discretionary, information technology, communication services. These are the three most speculative and bullish sectors. If you see these three sectors rise, that's a bull right there. Utilities, energy, consumer staples, these are the most bearish. So we had the Fed raise rates yesterday, right? They raised rates. We're in the middle of a war, and look at which sectors responded to it. To me, that's very meaningful. And it wasn't just, it says today, but again, it's yesterday because this is last night's data. This is daily data. So today hasn't had a chance to trade yet. Now look at it over a 5-day, consumer discretionary. The other ones are starting to come up. Now, when you look at it over a 30-day, over a 1 month, you'll see that these information technology, consumer discretionary, communication services are near the bottom. And defensive, utilities, energies are leading. So this is a very substantial upside, and I'm liking this if it continues. Now, looking at 11 individual sectors. Today's a big ETF day, so I like to look at ETFs. These are the 11 major ETFs. Financial got a really big boost yesterday, and I think financial is going to try to test the top. So I like financial stocks right now. Energy can go either way. Energy is a question mark. When before energy was an asset, now it's a question mark because we did go all the way to 130, and then we broke down quite a bit. Now the odds are we are going to go higher, but I don't think we're going to hit all-time highs again. Utilities should stay elevated because energy prices are expensive and they're going to stay expensive for quite some time. we're starting to see some upside from consumer staples, which makes sense because some of the consumer staples are food stocks and stocks that are interest rate sensitive. And consumer staples will absorb the added cost. Nobody's going to stop eating bread or drinking milk or even buying Coca-Cola or cereal or bread or whatever it is because because they're more expensive. That is inflation that's passed on to the consumer. Then you have consumer discretionary where it's not passed on to the consumer. But again, we're starting to make an upside. I would love, 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 love to see us break above the 180 level and then the 190 level. If we can break the 180 level and 190 level, I will be bullish on consumer discretionary. Industrial, I'm really liking right now a lot. It didn't really bottom out, and it's almost above this level right here. So if industrial can break above the 105.50, 102 level, there's a good chance we're going to hit the 103 level. Healthcare is breaking out. I like most of the stocks right now. The only thing I'm kind of neutral on is energy right now. Technology is also breaking out. That will follow consumer discretionary. Keep your eye on technology and consumer discretionary together. I'm hopeful that this is the bottom, but we won't really know till we hit the 156 level and start trading more and more and more near the 160 level. Communication services, I'm still bearish on. I wouldn't be buying this yet. I would wait for a good strong rally in consumer discretionary and technology because they're related. Basic materials, I don't see how basic materials cannot be going up with the destruction we're seeing in Ukraine right now. I mean, we're going to be using U.S. basic materials and international basic material companies for the next 5 years and bringing Ukraine back. Real estate is choppy right here, but I kind of like this congestion, and I think if we can go just a hair higher, we can have a good real rally. So to summarize, financials are looking really good. Energy can go either way. Utilities should stay near the current level unless energies really dump. Consumer staples I like, and I think they're going to go to the 76 level. Consumer discretionary, I'm hopeful. Fingers, toes crossed. I love industrial right now. I like the financial. These I love right now. Financial and industrial, healthcare. Financial, industrial, healthcare are no-brainers right now. Technology, again, whether we got to keep an eye on consumer discretionary. Basic materials, I love, love, love right now. Real estate, communication services, big question marks. So question mark with consumer discretionary, hopefully optimistic. Neutral on technology, bearish on communication services, neutral on real estate, really bullish on material, industrial, healthcare, and financial. Utilities can go either way. Consumer staples, I think, will do well. I think this breakout is very positive to take us to the 76 level. So consumer staples I like. Healthcare I like, industrial I like, basic materials I like, and the rest are kind of not here nor there. So and financials look really great right here, especially with interest rates going higher. Now, looking at the top stocks, you still have energy, but when you look at it on a 1 month basis, you will see actually that some non-energy stocks are starting to make the cut. Lilly, Enphase, that's solar, all right? That's very, very important right now. And I like solar right now because when traditional energy goes down, solar goes up. Shippers, C.H. Robinson Worldwide, Nucor Metal Company, Jack Henry, Healthcare, HCA Healthcare. Remember I said healthcare stocks are going up? So there's a lot of healthcare. Heinz, very consumer staple stock. Nextera, again, another solar stock. I like these stocks right now. Lockheed Martin. So when you're looking at it on a monthly basis, you have a lot more. Stocks that are non-related to the energy market, and you should take a look at them, especially healthcare right now. Now, today is Thursday, and Thursday I give you guys the top ETF and the option for it. Right? Well, right now. I'm going to tell you what I like the most right now. I really like right now. Let's go back to StockFetcher. So out of all of these, I'm loving the financial right now. Loving the financial. So let's go to XLF. Let's take a look at it here. Like the financial, it's at the 200-day moving average, which is really good. The option that you would buy would be, I'm going out quite a bit. I'm going to go out all the way to June. And these are not expensive options. You can get the 39 call or the 40 call for almost nothing here. Look at these. They're cheap. I'm not even going to recommend the spread on these. So June, $39, $40 call on financial. I think it's a bullish pick right now. Now, folks, unlike traditional trading strategies, there's one really weird market glitch, and it's allowed traders to take advantage of stocks that may be headed absolutely nowhere. Now, it's a Wall Street trick, and it's allowed informed traders to signal gains when a stock goes up, down, or just stays flat. Now, the average investor wasn't able to participate in this before, but thanks to new Money Crew head trader Lance DiPolito, anybody can access his point 30 formula to take advantage of this glitch. Click the link below to find out how Lance's point 30 strategy works. Do it now. Don't delay. And tomorrow, I'm going to give you my weekly recap, biggest winners, biggest losers, and what to expect next week. Follow the link below to check out Lance's video. If you're watching on YouTube, go to the Wealth Press YouTube channel, and it'll be below the video under the summary. Have a great day, and I'm hopefully optimistic on the market right now. Let's hope it sustains itself. I'll see you guys later. Send me some love letters. Support@marketgeeks.com. Bye, guys.